when that light bulb went off, we were off to the races, scaled to 36 single family units, still doing about 10 flips a year. And then we hit our next ceiling achievement. We needed to scale further, faster, and with less of our time. So do we do that? Do we go into multifamily, buy bigger properties, or do we invest in other people's projects? And I decided to do both, test it out for a couple years and see which avenue actually would get us closer to financial freedom.
Welcome to the Real Freedom Show, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. Hello, everybody. Welcome to this episode of Real Freedom, talking about building time and financial freedom through opportunities in real estate. I am your host, Mike Swenson, and today we are going to talk about passive investing. And what better way to do that than to talk to one of the experts from passiveinvesting.com, one of the best URLs out there, I will have to say. We've got Whitney Elkins-Hutten. She's the Director of Investor Education at passiveinvesting.com. And you guys have a whole bunch of different opportunities, from multifamily, self-storage, car washes, debt funds, all sorts of stuff, which we'll get into. And so you guys have over 700 million of real estate, 6,000 residential units, 1,400 self-storage units. And so I'll let you share more of the updated numbers, but welcome to the show, Whitney. We are so excited to have you here.
Thank you. Thank you so much. I'm happy to be here. The numbers that you reeled off are actually probably 2 years old, and that's just my husband and I's holdings. And so passiveinvesting.com, we actually have 1.4 billion assets under management, over 3,500 residential units, over 6,000 self-storage units, and then 30, soon to be 31 express car washes. We actually have a few more in the pipeline that are under LOI right now, so can't really tell you where those are at, but that number is expected to significantly grow here in the next couple months.
Awesome. Well, congratulations. That's a lot of stuff in a lot of different areas. Why don't you just share your background, how you got into real estate, and we'll take it from there.
Yeah. As you noted, I'm the Director of Investor Education here at passiveinvesting.com. I wish I could take credit for the URL, and that was all Dan Hanford, one of our managing partners. He did pay a little bit of cash, but not as much as one would think for that, but it's totally amazing. We get those comments all the time. I started off real estate investing back in 2002, completely by accident. I mean, honestly, the house that I bought with a significant other, I thought it was going to sink me. After we bought the house, about a month later, the relationship fell apart, and I had a house. I had the mortgage, I had the expenses. I was like, this thing's going to sink me. I'm going to be broke. So I stuffed it full of roommates. You know what any young 20-year-old would do, stuffed it full of roommates. It needed a massive rehab. We're talking green shag carpet, psychedelic daisies from the 60s painted on the walls. You're just like, what were they doing? 11 months later, sold the house, thinking that was the best financial move that I could do at the time. I actually regret selling that house today, but hindsight's 2020, and walked away with $52,000 in my pocket. A lot of skills built, but the one thing that I realized after I sold it is I hadn't been paying for any of my housing expenses. My roommates had been paying for everything, and not only that, I'd been cash flowing. And I was like, what is this? This is amazing. So I started, really diving, and I got to keep it tax-free because I had to move for a job. So I got to take advantage of the 121 exclusion, which is kind of like the 1031 exchange that, real estate investors are so familiar with, but for people who have primary residences. Long story short, did several more projects on my own, and then with my husband, and we got really good at building up buckets of equity, but really bad at creating cash flow. And it dawned on us one day that we should actually keep some of these flips that we're doing, and just when we move out, put a renter in there and start creating streams of cash flow. And when that light bulb went off, we were off to the races, scaled to 36 single family units, still doing about 10 flips a year. And then we hit our next ceiling achievement. We needed to scale further, faster, and with less of our time. So do we do that? Do we go into multifamily, buy bigger properties, or do we invest in other people's projects? And I decided to do both, test it out for a couple years and see which avenue actually would get us closer to financial freedom. And, quite honestly, I will say the passive investing over the long haul not only helped us build the cash flow, but build the equity, but also get our time back, which is, one of your most precious non-renewable resources. Um, anyways, I can go down rabbit holes all day long with passive investing, but we're my husband and I are at today. We have over 800 million personally in real estate and partnership. And you read a lot of the vanity metrics, but the main result that we get from that is 100% choice on how we spend our time, and we choose to work. We're still young and in the accumulation phase of our portfolio. But it gives us like freedom and flexibility. We were talking before the show about kids and schooling, and I'm like, why not take a few weeks off or a few months off and pull the kids out of school and travel? Like, that it gives you that sort of freedom.
Talk a little bit quickly, just because you had brought this up, this cash flow equity consideration. I know people that are newer into investing and just getting started are trying to figure out, like, I kind of explained it as you've got all equity on one side of a scale and all cash flow on the other side. And your preference and kind of your strategy falls somewhere in the middle. Is it a lot of cash flow and a little equity? Is it a lot of equity, a little cash flow, or kind of right in the middle? How do you help people think through that as they're deciding their strategy to kind of figure out what properties or what opportunities to identify on that equity cash flow scale?
Yeah, I'll go over like how I advise or, suggest people approach it, and then where I'm at personally. For people, how do you figure this out? Well, first you need to understand what your goals are. And this is where I think sometimes the trap of that people get into is that they're always trying to copy somebody else's investing plan. You really need to sit down and create your own investing thesis, right? You can take hints from other people's plans, but you really need to make it your own. Do you need cash flow? Do you need equity? Do you need tax benefits? Do you need diversification? What kind of time involvement are you willing to put in your portfolio? For people that are high net worth, doctors, lawyers, high, tech workers, entrepreneurs, you probably have a higher and better use in your profession. So, how quickly can you take that cash flow you get from your position or the equity through bonuses and profit sharing and put that onto the other side into cash flow in order to free those golden handcuffs, right? Other people, might need to, supplement with equity. Maybe they have like a, very, a small rental portfolio. They have a lot of cash flow coming in, but maybe they're in C and D class properties. We now need to start building up more buckets of equity so you can get higher quality type of cash flow. Anyways, there's a myriad of questions here, but really it boils down to the goals, the risk, and timeline. And those goals, risk, and timeline should shift from your 20s into closer to retirement, right? That pendulum is going to continue to shift. Now, for me, we were talking, just a second ago that my husband and I were still in the accumulation phase of our portfolio, but we decided to take a balanced blend. One, because we wanted to have that cash flow now to unlock us from our job. Even though we had no intentions of using it right now, like, at the time when we were working full-time W-2, we had no intentions on using that cash flow. So we could gather it all up and continue to reinvest back in the business. The number one mistake I see investors make is they say, my job, J-O-B, W-2, I make great income at it. I don't need any cash flow. Let me, bet the house on, on a complete equity deal, development deal. And then now that money is locked up for 3, 5, 7 years, earning zero cash flow, and they have a life event happen. Some reason why they have to step away from their job or like reduce their hours, or maybe they just like burn out and they want to switch jobs. They don't have the cash flow there to support them. So when you take a balanced approach, you can actually flip that switch. That's what I really, help my investors that I coach at Ash Wealth, like understand now, even if you're not consuming the cash flow, if you decide in 3 or 4 or 5 years that you want to like take a lower paying job so you have more flexibility, you can start utilizing that cash flow earlier. But if it's never there, you can't do that.
And also, you guys focus on a few areas that a lot of people have probably described as more of a cash cow, like a self-storage or car washes. So I'm curious to hear, as you're helping identify different asset classes for people, talk about those opportunities a little bit.
Once you have your goals, risk, and timeline identified, now you have to match it with what type of asset that will actually yield that. That's another mistake I see investors. They get maybe they understand their goals, risk, and timeline, but they're so attached to one particular asset, and that they're going to have to take enormous risks with that type of asset class in order to achieve it. So that's where you're going to, want. I don't let the asset, determine your goals. You determine your goals, and then you match it to the asset. So self-storage is, pretty, stable cash flow, modest equity growth. Unless you're doing like, expansions or development, we like, properties that have an expansion component to it. So we can immediately boost the NOI by just adding more units if there's like a couple of acres or something like that. One of our last, RV storage deals, we were able to add, several units to the property, and it's RV storage. It didn't take much. Like we didn't even have to wreck walls for that. Just, put it in a parking lot essentially. So, that can, even within that particular asset class, you can still get, some nuances there on how it might match your goals. Multifamily, historically has been kind of like that nice middle road, balanced cash flow and equity growth. But again, still there's a sliding scale in there as well. Right now, I would say cash flow is pretty compressed in multifamily, but I see in the next 2 to 3 years that really kind of turning around. One, with the interest rates, two, with the cap rates starting to expand a little bit. But investors are searching for yield, and how can we provide our investors with cash flow, equity, and tax benefits, and not have to swing for the fences with risk on that. And we started looking at cash flowing businesses actually well before COVID actually happened, and we identified hotels and express car washes. Now, hotels, have recovered very quickly, post COVID. And express car washes, this is a new space. It's a high intense cash flowing business. It is low operational expense. And the current car washes that are owned right now, just think about this. The industry is $33 billion and growing. It's very small. It harkens back to like self-storage in 2006. But now these are primarily owned by mom and pop owners. And they maybe built 1 or 2 or 3 locations, but they're owner operators of these businesses, because you need 5 to 10 locations before you can even hire one regional manager. And so we're starting to consolidate these locations within a portfolio and use our immense buying power for that. Now, we also are taking the technology we developed with our self-storage and starting to layer that on to the express car washes. So you already had a low operational expense business, high cash flow business, high margins. Now we're driving that down, one, with our buying power, getting these, purchasing these properties at a lower multiple. We're able to negotiate down the chemicals that are used on the property, get better equipment. So we're lowering our costs that way. But then we're also taking the technology that we have here, and we're moving people from single pay for their car washes to a monthly recurring revenue model. And so there's just a lot of different ways that we can optimize this business and really unhook the income from the actual time that one spends at the car wash. I'm very passionate about this. I can keep talking about car washes forever, but I think that's a unique opportunity for people in this environment, investors in this environment, to still hit nice cash flowing numbers, own the real estate underneath, still take advantage of that appreciation, and then also get nice tax benefits. Because it's a business, you can actually write the building off, the car wash building off as a piece of equipment. So we can hit some 60 to 80% year one depreciation numbers right now.
Yeah. And I think for some people that are looking for that cash flow to be able to earn a little bit of time freedom, or somebody that's working a job right now, that cash flow that you're building up through something like car washes, you can always invest that in more appreciation play businesses down the road. And so it's kind of like you're going upstream and starting off well with building this cash flowing business that can then fuel everything down the road behind it.
Absolutely. I think one thing that I would impart to investors right now, make sure that you invest with an operator that you know, love, and trust, that are in great growth markets and high quality assets, even if the cash flow seems a little low for year one, because these things, the cash flow will grow over time. Between 2015 or really 16 and 2019, yeah, everybody was talking about the 2% rule, the 1% rule, right? Like, high cash flow, we're back down to where cash flow, we're level setting expectations. We're back down to normal cash flow on these assets. You get in, let it grow, right? This isn't get rich overnight. This is like, get in and wait and you'll get rich.
So for somebody that, just because you'd mentioned being passionate about car washes, where do they start looking for these opportunities, or how do they get started with something like that if they've never even thought about car washes and they're like, oh my gosh, Whitney's talking about it. It sounds pretty amazing. What do I start doing to educate myself?
Yeah, you can reach out to me at passiveinvestingwithwhitney.com. There I've got some, free resources in our masterclass, on express car washes that you can learn. Because, really first is educating on the different types of car washes, right? I'm specifically talking about the express car wash, not the ones where you drive in a concrete like garage and you wash your own car. Not the ones that are attached to the gas stations, and not your full service car washes, because each one of those, while they might be money makers, have their own, they're not business optimized. And so we're especially trying to pick up that express car wash type of asset or develop it from the ground up. We will do both. We're looking to scale our portfolio to 150 to 200 locations and take it IPO. Backup, I shouldn't even say backup plan, a very quality second plan is to roll it up to a REIT. And so there's a huge taste for this right now. From like Blackstone and all, you just think of a REIT, like they want low operational expense, high cash flowing businesses. Now, how do you get started like this? Anybody listening here? Well, one, you could do it yourself, right? An express car wash, probably the simplest way to get started would be to invest in a franchise. But now you might not own the land. You definitely don't own the brand. So you got some business issues here. And you need to have probably like $1.5 million plus the cost of the land and a little bit, set aside for reserves, a couple $1 million set aside for reserves just to get it off the ground. For most people, that's not palatable. Two, you could invest in an already operating business that is a franchise, but again, you don't own the land, you don't own the brand, and there might be some issues there, right? Like you're not going to be able to probably exit like you want to. For us, we are a direct owner, so we actually own the land that the car washes sit on. We own our own brand. We don't franchise it, so we're direct ownership, and we own the third-party management company. Because that's the last piece of the puzzle, that third-party management company. If you want to have a very strong exit, you need to have property management already built into your business to be able to either one, IPO it, or two, exit. Because Blackstone, if you're exiting to a REIT like that, they're not in business to manage car washes. They just want to clip a coupon, right? So think of the end in mind. Like, what is your exit going to be? What's your ideal exit? And then build it back from there.
And how many years have you guys been tackling the express car wash sector?
We launched our own brand 2 years ago. So we've been in the space longer than that, but we launched our own brand 2 years ago, and we're already the top, one of the top car washes in the United States, car wash brands. And so it's been, when you build your own property management company, we already have 200 employees under that are within the company. You learn a lot, and you learn a lot really fast. And so, we've scaled primarily in the east and southeast part of the United States, and we're looking to expand further along, the Gulf Coast and into the interior part of the United States. But we're remaining really thoughtful here. We're not necessarily looking to build in the major metropolitan heart, where you're seeing all these massive like express car washes go up. We're looking to be in areas where we have no competitors for 3 or 5 miles around us. We're looking to, really stand out. And that might mean being in a secondary market or somewhere between a secondary and a tertiary market. We have one property in Gaston, South Carolina that makes almost just as much money as our largest property in Fort Myers, Florida. And they're two different sizes of car washes. One looks like a little mini Starbucks in comparison to the other one. So being bigger doesn't always mean being better.
Well, and I think for people listening, you can try to figure it out yourself, or
Mhm.
you can align with people that share your resources and share your learnings and share your experiences together. Because, I was talking with somebody that was looking to do their first investment. And so it was them and a buddy trying to do their first flip. And I get it. You can certainly do your first flip on your own. But what if you pooled your money together with some other people, if you can find people that align with you and go hit a better economies of scale? It's kind of this idea of, hey, if I do a single family home, yeah, I'm in control of it. But if that person is not paying rent or that unit's vacant, I've lost 100% of my income. If I even just go to a duplex, right now, it's 50% of my income if one person's out, and sliding all the way up to these larger economies of scale. And so I think sometimes people are maybe have a lot of ego in it, where they feel like I have to do everything myself, where it's like, hey, I could latch on to all the experience and education and learning that you've already figured out in the car wash space, or I could try to figure it out on my own. Like you said, it's so hard to try to pull that off on your own. Why don't you just latch arms with somebody who's moving a lot faster and a lot bigger already? And you kind of have to give up that ego, but you can earn better returns, and who cares at the end of the day, right?
Well, one, like what you're alluding to, you don't earn a gold star for doing everything yourself, right?
Mm-hmm.
Two, if you're going to create true diversification within your portfolio, specialize on one niche, right? Maybe that niche is your business, right? Or something else that you're building. Maybe, single families is your jam. Maybe building, multifamilies is your jam. And then if you want to diversify your portfolio, find the experts that already have the knowledge and expertise, the team. They have the credit and lending, they can pull the investor capital, and they can operate the asset, invest with other people. A lot of operators invest with us. They understand that, they practice that, and they do multifamily, and they're like, we want exposure to express car washes, but we're not going to go figure it out ourselves. Two, I feel for people. I started off in single family investing, and you're just like, I think you're new to real estate, and you're like, this is amazing. I have cash flow coming in. You can see your portfolio growing, and then you got the tenant that doesn't pay, right? You're not 100%. You don't lose 100% of your income. You actually go negative, right? Because now you have all the bills yourself, right? And then you get like maybe an insurance claim, and you start realizing, okay, this isn't exactly passive. Maybe the IRS calls it passive, like passive income, but this is certainly not passive with my time. So there is a whole kind of scaling to that. I feel like a journey that people have to mentally go through, whether they go through it physically or not. They have to go through that at least mentally to get them from like investing in stocks, bonds, and mutual funds, which we are so trained to do, right? That's what our educational system almost teaches us to do. To getting into alternative assets, either diversifying our portfolio or going all the way over there and turn, entirely into owning different types of real estate. But then, it might be single family homes, multifamily, syndications, and then maybe like, hedge funds and then venture capital, right? There's a whole journey here that somebody has to go through. So I don't fault anybody for that, but how quickly can we get you moved along that journey and not stuck in one mentality?
Real estate agents, are you tired of letting the busyness of your real estate business get in the way of your real estate investing goals and your financial future? I'm excited to announce that we've created the Real Freedom Investor Agent Tribe to help you. We've got a ton of content, educational tools to help accelerate your learning curve and get you on the right path to hit your investing goals. We also have a mastermind tribe of people just like you, agents that want to grow their own portfolio and encourage you and cheer you on along the way, as well as some private one-on-one coaching. So go to realfreedom.com, Click on the store, you'll see the options there. We're so excited to be able to help you. I've priced it super low so price can't get in the way, but did want to have some skin in the game for you to help with that accountability. So go check it out, realfreedom.com, click on the store. We're excited to connect with you and excited for you to connect with your tribe of real estate agents, investing, trying to build their financial freedom. Now, you had mentioned offline that you've got a book coming up here, Money for Tomorrow. I would love to just hear a little bit for folks listening, a little bit kind of about that journey, about that message that you're going to have with your upcoming book.
Absolutely. Yeah. So Money for Tomorrow is really written. I actually wrote all this material that went into the book for my daughter. I had the unfortunate experience of settling 5 estates within my family, seeing another 2, being part of another 2. And just all the myriad of ways that, and some people think that if there's an estate, that there's a lot of money attached to it, but not necessarily so, right? That's just the legal term, for where the assets go when somebody passes. And, I just, going through this experience and just realizing firsthand all the different ways that your wealth can be eroded, in things that are 100% avoidable. But there's a taboo. We don't discuss that. Whatever reason, we don't take care of that early enough. And I wanted to write a guidebook for my daughter to help her understand how to create wealth, how to grow it, how to keep it, and then how to pass it on. It's really those the keep stage and the growth or the passing on stage. I see people lose hundreds and thousands of dollars. Okay, that $100,000 may sting, but compound that out at 7% over 30 years. We're talking millions of dollars lost and eroded amongst families. I want to help families avoid that. So the premise I use in the book is, if you think of generational wealth as a game, you have to understand the objective of the game, okay, the strategy in order to play the game, okay, how do you keep it, how do you create it, first of all, how do you keep it, how do you grow it, how do you pass it on, and then we got to talk about all the various tactics. The problem is most people start with the tactics and they don't actually understand what the true objective is, nor do they have a nice strategy in place. And really, this book is focused on the objective and the strategy that anybody can use. It doesn't matter if you're in real estate or not. Anybody can use to get you 80-85% there on creating multi-generational wealth for your family.
Well, we're excited to see it come out in the future and excited to go pick it up. For people that want to reach out to you, learn more about passiveinvesting.com and what you guys are working on, how can they do so?
If you want to learn about what we're doing as far as passive investments and get more education around passive investments, you can reach out to me at passiveinvestingwithwhitney.com. A little form there, but that you can also schedule directly on my calendar. If you're looking for more one-on-one support, if you're interested about finding out about the book and the details there, it's coming out with bigger pockets here in the middle of February 2024. You can reach out to me at ashwealth.com, ashwealth.com.
Thank you so much, Whitney, for coming on and sharing your experience, and just excited how you are helping others think a little bit more in depth about what they're doing, their strategy, and what they want to accomplish. And so thanks for what you're doing, and excited to see you guys continue to grow and see the milestones you guys continue to hit.